Hello again, this is Robert Schein, Managing Director and Partner with Blanke Schein Wealth Management. Today is Tuesday, May 19th, 2020. There are several observations, insights, what traders are watching, what we're thinking about here at Blanke Schein Wealth Management that we're going to discuss in our daily updates. We have 3 topics today, so let's get right to it. Our first topic relates to the Fed's signaling effect. I mentioned this, I brought this to the forefront several weeks back, meaning that the Federal Reserve has several facilities in place, and they've come to throw basically the bazooka at the marketplace, as well as fiscal policy. Congress has passed billions and trillions of dollars to put in the hands of Steve Mnuchin, Treasury Secretary. Both the Federal Reserve as well as Steve Mnuchin, the Treasury Secretary, and both facilities, if you will, both avenues, fiscal and monetary policy, have taken their time as it relates to working those facilities and using those tools and using all that liquidity into the marketplace. Let me give an example what I'm very specifically discussing. The Federal Reserve Chairman this morning was, as well as Steve Mnuchin, Treasury Secretary, appeared before Congress, and they gave testimony. Actually, as passed by the CARES Act, they have to give a quarterly update from this point forward as it relates to the testimony in front of Congress in a spirit of transparency, which I think is all a great thing. One of the topics they discussed when they asked the Federal Reserve Chairman, Jerome Powell, very specifically, how are the facilities being implemented and integrated in the marketplace? And he said exactly what I thought would be the case as I've been reporting specifically over the past few weeks, is that he's been very measured and thoughtful as to getting the facilities up in place and getting the facilities actually into the marketplace. So what this has done is the market, meaning the credit markets, liquidity markets, and a few others, there's some facilities that they've put in place right away to backstop markets and provide liquidity as they were indicating they would. But they have so much ammunition, dry powder, if you will, that have been yet to actually work its way in the marketplace. Ultimately, I believe that's by design, meaning the Federal Reserve signaled that they were going to do this. Institutions and the marketplace rushed in ahead of the Fed. So they're basically trading with the Fed. You don't fight the Fed. We've talked about that before. In investment grade corporates, even high yield junk markets, we saw sort of those yields stabilize, meaning come down from high levels and sort of modify in this whole process, without the Federal Reserve actually having to take action or great action or substantial action in that market. So what have they done? They use the Fed's signaling effect essentially. So they said they're going to go, in this marketplace, we're going to provide liquidity. We're going to buy some investment grade corporates, but they have yet to actually do so. Well, the market ran in, supported that marketplace, and the Treasury still has plenty of ammunition to support that marketplace. I think it's a brilliant move. I think they knew exactly what they were doing when they were doing it. Therefore, they don't have to use as much of the money, and they can support it they bought some time essentially. And keep in mind, every time the Federal Reserve uses $1, it's leveraged 10 times. So even though billions have been passed, they have trillions to actually, ultimately support the market from liquidity standpoint and the capital markets themselves. So very interesting. I think it's a big topic that we will be learning about years from now. Historians will be discussing, and only the effectiveness, both short and long term, time will tell. So, but that's the Federal Reserve signaling effect. Let's take a look and keep watching it as it plays out. So the second topic would be the catalyst for additional stimulus. As a lot of people, families are at home, and those that have been unemployed, as we discussed before, 36 million unemployed now, and about 77% of those are furloughed. So it's a short term, hopefully it's a short term effect where they would get rehired. But as we reopen, it's going to be slow. Those businesses might not be in the same shape to reopen or rehire. So what Congress is going to do, the Democratic House passed a $3 trillion stimulus on Friday. On Monday and Tuesday this week, the Senate is now looking at it and sort of their version of the plan. As I said before, it's sort of an opening bid, sausage making event that's going to take place in Washington. So it's not if it's going to happen. The question is when. We believe that it's going to happen in the middle of June, right before you get several states that are backed up to fiscal budget year end. So there's a lot of fiscal budgets that obviously have now been way out of whack in terms of different states, and they have a 6/30 fiscal budget year end. So I think that Congress will come to the aid of several states, if not all the states and municipalities, before the end of June. I think that's the catalyst to have something passed sooner than later. Final topic of the day, US-China relations. I appreciate our clients that have been writing in and calling and letting me know personally more topics they'd like for me to cover on a daily basis. And this is one of them. Actually, they're saying that, that they believe, actually we all believe, that the China-US relations is going to continue to cause more stress on a daily and weekly basis as we move on from this event. And that is actually playing out here in the currency market. So if we look at China renminbi versus the US dollar, we're seeing an upward trend in terms of the stress building in that marketplace, which is indicating that that's not going to go away anytime soon. And we will see how this plays out from trade, from further restrictions, as well as tariffs, playing out. So it's a bigger topic that will continue to evolve. We just hope that no one ultimately walks away from the trade deal. That was just, the ink wasn't even dry before we got to where we are today. So let's keep watching that, and I'll keep reporting on it too. Thanks for watching.